let's get in Aditya Agarwala to talk about markets which is taking off, especially the broader markets. I mean, what resilience, Aditya? I am surprised, right? Yes, you can say there's a lot of cash on the sideline which is cushioning the fall. DIs are sitting on elevated cash levels. Who knows? But it was just a one-day scare. Such a tragic and unfortunate event and on such large scale unfolding in Middle East. And what do we get? Barely 1.5% 2% cut on the small cap index.
Good afternoon, Ajay. Thanks for having the show. To be honest, we did get a bit of a geopolitical tension, and markets tend to correct significantly on back of geopolitical tensions and these news. But to be honest, markets had started correcting and showing signs of weakness much before these news came out. And many a times, Ajay, what happens is whenever you have an event, it tends to form a bottom for the market, and from there, it usually tends to inch higher. So I could feel that this was one of the cases where markets were waiting for some kind of a negative news, and we got a negative news in trade yesterday, wherein markets corrected a bit. What was interesting to notice is Nifty did not break the highs of the hammer candle that we had gotten last week, which was very interesting, closer to about 19,500. And from there, markets did show a decent pullback in trade yesterday itself, and today, from the word go, markets have been buzzing around. So my sense is there is more upside left in this rally that we are witnessing in trade today. Wouldn't be surprised if markets actually test levels of 19,700 to about 19,800 as well on the upside, which happens to be the upper end of the range, Ajay. More or less, markets are still locked in that range between 19,800 on the upside to about 19,500 on the downside for the moment. And out here, something to notice will be Bank Nifty, which has underperformed big time. And my sense is one should look at Bank Nifty at current levels, because the risk to reward is definitely in favor of going long on the Bank Nifty. And it did take support at the trend line in trade yesterday. And from there, we are witnessing a bit of a bounce back, though it's still underperforming the Nifty. But I believe these are good levels to look at going long on the Bank Nifty. You could easily see levels of 44,600 to about 44,700 on the upside, with a decent support at 44,000 on the downside. So the risk to reward is clearly in favor of going long on the Bank Nifty at current levels, given the fact that some of the mid-cap ITs have already rallied, and we are seeing the kind of sharp rally in the real estate already in trade today.
Right, that's correct. Indeed. I'd also like to know your thoughts on the Nifty or the BSE, whichever small cap index you're watching. The correction there is over, and also then you can share your specific trading idea, Aditya.
I don't think so, Ajay. That is one space which I would like to remain cautious. I've mentioned that time and again that the BSE small cap or the NSE small cap and the mid cap end of the markets won't see that kind of a rally that we have seen already in the last 2 years. I would like to remain little cautious here, even though you see outperformances every now and then from the BSE and the small NSE small cap and the mid cap indices end of the market. But I would like to remain little cautious here. One should remain more sector specific and stock specific in this market, because again, VIX is trading at historical low levels, and with any kind of sudden surprise, you could see a spike in the VIX, and we know if that happens, usually it leads to a massive correction in the broader market. So word of caution here, don't be too aggressive in the broader market, especially in the mid cap and the small cap space. If you're sitting on two decent gains on your portfolio, you should look to actually trim down your position in the small cap and the mid cap end of the space. Look to load up some of the large cap banks which have actually not performed, or you can also look at the real estate space, which has been buzzing around big time, and especially in trade today. We're looking at the highs of 2009, Ajay, to be breached on the real estate index, which is a big move. So 630, 632 was the level which we had last seen in 2009, and we are eyeing that level now on the BSE real estate, NSE real estate index, which I believe is a big move, which is expected on the real estate stocks.
Mm-hmm. I want to understand, so the two components of the market which are becoming a big drag. One is HDFC Bank, the other is Reliance Industries. Would you get in there, or you would avoid that space?
I would like to get in the HDFC Bank, Ajay. Maybe a Reliance Industries might not at current levels, but HDFC Bank looks very interesting to me. If I flip the chart to a monthly and I plot a RSI on a monthly time frame, it is standing at a support level, long-term support level, Ajay. And in times of underperformance, whenever HDFC Bank has underperformed, RSI on the monthly time frame doesn't go below 40, and it is right now placed at the 40 level. Plus, if I take a look at the chart setup, also it is sitting at a good support area. So I believe it's a very good time to enter HDFC Bank. A disclaimer here that this one stock which has been recommended to our clients at current levels would be a part of my personal portfolio as well. Because we are adding HDFC Bank at current levels, clearly because of the fact that risk to reward is in favor. And if I take a look at the ratio analysis of Nifty, Bank Nifty, and HDFC Bank, that too clearly tells that it's time that HDFC Bank starts to outperform, because the ratio is clearly skewed in favor of going long on HDFC Bank, and maybe look to put some profits from other large cap banks, which are ICICI and Axis.
So book profits from ICICI and Axis, and the risk reward is very favorable on HDFC Bank, and that's a position Aditya himself is also adding at this point of time. Thanks, Aditya, for joining us today. And in terms of his other stock recommendations, of course, he talked about the breakout that we're seeing in the real estate index. The top pick from there is Godrej Properties. The buy stance, the target is around 1870 on that one. And then, of course, UPL is the other one that he is suggesting a buy on, with the target of 645 on that stock.